You are say 67 years of age, your financial advisor has advised you to buy an annuity. You don't know whether to buy an annuity now because the interest rates are very low. Maybe you're getting only 5.25% or 5.30% for your annuity, and it is taxable. So you don't think it is worth buying an annuity because there is no attraction at all, right? You're much better off buying maybe a 30-year GSEC paper, which could be available at 7% or approximately 7%. Suppose that is available. Those are the two choices. Yes, it makes sense that you buy a 30-year GSEC paper. It's not so easy to buy. You may not get it in the quantity that you want, and you may not get till the amount that you want. So for a minute we will cut out GSECs. Let us assume that you have decided that you will buy an annuity because your advisor told you. Should you wait for interest rates to improve? Which means, should you wait for interest rates to go up a little? So that the LIC or whoever the annuity provider suddenly makes it 6% instead of 5.25. I think it's a very difficult game, right, to play. What happens if interest rates go down and next tranche LIC says we'll give you only 5% or 4.9% or something like that? Then what happens? So these are the following things that you have to do. First, don't worry about nominal interest rates. Look at interest rates minus inflation. If you look at interest rates minus inflation, annuities will always be very close to zero, if not negative. That is how it will be. Post tax, it is 100% going to be negative, especially if you are on the higher tax slab. But even whatever minimum 20% tax slab also, chances are the yield will look negative if you look at the real return. But this situation will never change. I remember when LIC long ago announced that 12% would be the interest rates, we felt, oh my God, 18% is what Reliance was paying, right? So you're saying, oh God, this is so low. But look at 12% today. You would feel like a champion that you bought an LIC annuity long back, maybe 15, 20 years ago, for the rest of your life, and you're getting a 12% yield on your basic portfolio. That could have happened, right? So similarly, interest rates can go up or go down. Now, if you have decided that you are going to buy 1.5 crore worth of an annuity, so then don't put 1.5 crores in an annuity now. At 67, put 50 lakhs. That is 1/3 the amount that you have thought. If your amount was 30 lakhs, then put 10 lakhs. If your amount was 1.5 crores, then put 50 lakhs. So make a start. That is very important, because after some time, if interest rates go up and you get better yielding annuities which are paying 7% or 7.25%, because rate of interest has gone up, put another 1/3, whichever you thought. So maybe you're 72 now, and you have 1 crore out of the 1.5 crores which you had earmarked. Put another 1 crore in an annuity. What you're doing now is you're playing with interest rate. You're reducing the interest rate risk by saying, I will invest in 2-3 tranches, right? So some money you should also have in government securities, which means GSEC bonds rather than GSEC funds. And having money in GSEC funds is also not a bad idea. Start small, do an SIP, and afterwards, after you retire, do an SWP. I think that makes sense, provided if you're young. If you're already 57, 58, then gilt fund may not be the best for you. But if you are in your 30s, 40s, and you want to put away some money for your retirement, and that you want it to be in a debt fund, GSEC funds make sense for such people who have long-term view, right? So that's it. Beat the inflation and interest rate expectation by doing it in 2-3 tranches, 67, 72, and maybe 80, something like that, or 62, 67, 77, and 85. Any such, break it into 3 stages, so that in case interest rates were to go up, you will benefit. But whenever we talk about interest rates going up, everybody will tell you, as India becomes a developed economy, interest rates will only go down. When there is consensus, you have to be worried, right? So buying gold, buying an annuity, whatever, don't try timing the market. So if you have gold and you think gold has peaked, selling gold to buy an annuity, again you're trying to time the market, but don't worry. Because at some stage you have to buy the annuity, and you have I think you have a 15-year window, and during that time some asset of yours goes up, could be gold going to a new peak. That's a great time to be selling off some portion of the gold and putting it into your annuity plan. Thank you.